Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we'll be talking about the top market events that are currently moving various asset classes. We'll talk about the Fed rate decision last night, as well as the oncoming European Central Bank interest rate decision that's happening this afternoon. So once we cover that, we'll also be looking at some other key highlights that are currently moving the markets, try to understand some technical analyses and where prices might be headed next. And now, once we do that, hopefully everyone will trade from an informed perspective. So as always, I would like to begin with a disclaimer that this session does not constitute investment advice. It's not a recommendation to trade, so you should always do your own due diligence. And of course, practice proper risk management. So good morning, Robert Cavale, Paul Kerry, Joseph Gisharu, Air Music. Thank you guys for joining. Hello, Tony. Thank you for joining. So let's get things started. We'll be starting with the economic calendar, try to understand where things might be headed next. So as you can see from the economic calendar, we don't have much happening this Thursday. So looking right from the morning, trade balance in New Zealand. So just need an update here. Just give me a sec. So trade balance from New Zealand came in at 219 million. Big jump into the positive right from having a deficit in the previous trading where they had a negative 435 million New Zealand dollars. So in this case, a jump into the positive basically shows an improvement in business for both exports and imports. And in this case, it's supposed to be very positive for the New Zealand dollar. And as you can see from the currencies market, the New Zealand dollar and the Australian dollar, as well as the Japanese yen, are some of the strongest currencies in the market. So ANZ business confidence slowed down to 54.4, down from 62.3, whereas import prices were slightly higher at 0.2% compared to the previous reading where there was a drop of negative 1.4% quarter over quarter. So looking at French consumer spending, there was a slight uptick to 0.7%, up from 0.2% in the prior month, whereas the GDP went into the negative territory compared to the previous increase of 0.4%. In this case, we had a drop of negative 0.1%. So trade balance in Switzerland, on the other hand, went to the negative, meaning that it slowed down to 3.49 billion, in this case Swiss francs, down from the previous reading of 6.11 billion. So German import prices also slowed down to 0.4%, down from the previous reading of 0.9%. KOF economic barometer for Switzerland rose to 101.6, up from 99.6, which was better than expected. And Spanish flash CPI showed that inflation in Spain jumped higher to 3.0%, up from the previous reading of 2.8%. So going forward for the rest of the day, we'll be looking at the Italian preliminary GDP as well as German preliminary GDP. This will be happening at 12 p.m. M4 money supply, mortgage approvals, and net lending to individuals for the UK economy at 12:30 p.m. Then Italian monthly unemployment rate at 1 p.m. And for the overall Eurozone, we'll be getting the preliminary flash GDP and the unemployment rate at 1 p.m. So all day we'll be looking at the Italian 10-year bond auction, and most important and the most anticipated event for the day will be the advanced GDP for the US economy and unemployment claims, as well as the ECB rate decision. So at exactly 4:15 p.m., this is when we will be expecting the European Central Bank interest rate decision, where overall the market is expecting a 25 basis points rate cut from 3.15% down to 2.90%. So drop in interest rates in the Eurozone is expected to fuel a very strong rally in European equities, and it's already happening. So for the better part of the week and some part of last week, we have seen a very strong rally in European equities, especially from the German DAX 40 index. So if you look at other European equity indices, they have also been on an uptrend. So we'll be focusing on that later in the presentation. And of course, we'll also be looking at the euro against other currencies, where the euro has been largely weakening amid expectations that these rate cuts are leading to an expectation that the ECB is going into ultra easy monetary policy, or basically they are looking to have interest rates too low, which is expected to boost economic activity. So advanced GDP in the US economy, we're expecting a slowdown to 2.7% quarter over quarter, down from an increase of 3.1% in the previous reading. So this will be a very interesting data point. So I'm trying to gather the prior readings. So just give me a sec. So as you can see in the prior readings, we had 4.9% in October 2023, then slowed down to 3.3%, slowed down further to 1.6%, then a slight uptick to 2.8% in July, October 2.8%, and now it will be a slowdown to 2.7% if it comes out as expected. And of course, the previous reading was 3.1%. So in this case, we should be expecting to see a very strong economic indicator from the US economy, where a strong GDP is positive for the currency and a weak GDP is basically negative for the currency. So after the main refinancing rate or the interest rate decision by the European Central Bank, press conference will be following closely, and it will be happening at 4:45 p.m. where the ECB President Lagarde will be talking about the rate decision and share insights about oncoming policy. Of course, there will be questions from journalists, and these tends to have even more volatility compared to the rate decision announcement. So in this case, a focus on 4:45 p.m. Will be to your interest, trying to gather insights on where the ECB might be moving rates next. And in that case, it will have a much bigger impact on the euro pairs as well as the European equity indices. So as we approach the end of the day, we'll be getting the pending home sales from the US as well as natural gas storage data at 6:30 p.m. Then after midnight at around 2:30 a.m. on Friday, we'll be getting the Tokyo core CPI, where in this case, we're expecting a slight uptick in inflation in Tokyo to 2.5%, up from 2.4%. So the unemployment rate in Japan is expected to remain the same at 2.5%, whereas industrial production is expected to have improved to negative 0.1%, up from a previous decline of negative 2.2%. So retail sales in Japan are expected to have had an uptick year over year of 3.4%, up from the previous reading of 2.8%. This is positive for the JPY, especially if you get a much bigger outcome. So towards the end of the week, the main events will be the German preliminary CPI. This will be happening around midday tomorrow. Then we'll be getting GDP from Canada at 4:30 p.m. And of course, the Fed's favorite measure of inflation, which is the core PCE price index at 4:30 p.m. before we look at the employment cost index quarter over quarter for the US economy. So those are the key highlights on the economic calendar between today and tomorrow. And now I believe we can jump into some other stuff, try to understand what are the leading news that could be moving the markets later in the day. So on the need to know market risk or the events that could be moving the markets today, a key focus will be on the European and US market futures, which rose alongside Asian shares as traders anticipated the ECB's rate announcement. So outside of that, the Bank of Japan plans to buy bonds in February at the same pace as January, so nothing much of a change here. Trying to see if there's anything else on the morning prep. Okay, somehow my page is not loading, so I'm gonna jump to the next part of the presentation today. So far, year to date, the weakest currency has been the UK pound, which has lost about 0.48% against the US dollar. So this is an improvement. At some point, it was down over 2%, so being down over 0.48%, means that the pound has been making some form of recovery against the dollar. However, on the gains, the Japanese yen has had the biggest gains since the year started, up 1.77% against the dollar, mainly as a result of the Bank of Japan hiking rates by 25 basis points to 0.50%. So the New Zealand dollar is up 0.93%. As we have seen with the trade balance, it seems like the economy is really strengthening, and as a result, we are also seeing a very strong New Zealand dollar. So Australian dollar, which has a positive correlation with gold, is up 0.64%. Of course, gold has been pretty strong and is very close to hitting a new all-time high. We'll be checking on that later in the presentation. The euro, which is the forecast for today, has been up 0.62% against the dollar. So we could be seeing the euro ceding some ground to the dollar, especially after the ECB decides to cut rates this afternoon. So Swiss franc is slightly up 0.13% to the dollar, whereas the Canadian dollar is slightly down 0.23% to the dollar. So that's since the year started. But if we check data from the last 1 week, the strongest currency in the market has been the Japanese yen, closely followed by the dollar, whereas the weakest has been the Australian dollar, New Zealand dollar, euro, and Canadian dollar. So outside of that, there's quite a number of big news that are currently happening in the markets. So Microsoft Meta CEOs defend AI spend after DeepSeek stuns tech world. So clearly they had to defend themselves, especially given the critics from Wall Street that were challenging the amount that these companies have been spending on AI infrastructure as well as AI research. And now that we are seeing a much cheaper Chinese alternative, investors have been questioning these investments. So outside of that, Meta has been doing really well because their AI products have largely been improving their products as well as ad revenue. And as a result, people have more, or investors have more confidence in Meta's AI spend compared to other companies like NVIDIA that are largely dependent on selling high quality chips. And so far, the market has showed that you can develop better AI even with less quality chips. So outside of that, we'll be expecting Apple earnings later in the day. So Meta earnings were better than expected. Apple to report Q1 earnings a week after stock hit with 2 downgrades. So this will be a big market mover. So of course, on other news, there was a big accident in Washington, D.C. Involving several airlines. So American Airlines flight collides with a helicopter in midair during approach to Reagan National FAA. So an American Airlines flight collided in midair with a helicopter as it approached Reagan Washington National Airport on Wednesday night. So a PSA Airlines Bombardier regional jet collided in mid-air with a Sikorsky H-60 helicopter while on approach to runway 33 at Reagan Washington National Airport at around 9 p.m. local time, the FAA said in its statement. So there will be more following this, but of course we'll be expecting to see some form of reaction, especially for American Airlines stock. So outside of that, the German stock market index, or the DAX, has been performing really well, currently up over 8% since the year started. And of course, if you look at the performance of the last 1 day, it was up 0.08%, but still quite a good performance. And this week it's up 0.89%. So we should be expecting some more volatility from the stock, especially after the ECB rate decision this afternoon. So yesterday's news, or the big news from the FOMC committee, was that the Fed decided to hold rates steady at the current range between 4.25% and 4.50%. So the Federal Reserve kept the rate steady at this range during its January 2025 meeting. In line with expectations, the central bank paused its rate cutting cycle after 3 consecutive reductions in 2024 that totaled a full percentage point. So Chair Powell said that the Fed is not in a hurry to lower interest rates and that it paused cuts to see further progress on inflation. Policymakers noted that the recent indicators suggest that economic activity has continued to expand at a solid pace. The unemployment rate has stabilized at a low level in recent months, and labor market conditions remain solid. Additionally, the central bank acknowledged that inflation remains somewhat elevated and removed its previous reference to ongoing progress towards the 2% target. The Fed also said that economic outlook is uncertain and is attentive to the risks to both sides of its dual mandate. So the dual mandate, just to remind you, is that the Fed has a mandate to maintain full employment in the US economy and also maintain stable prices, which is estimated to be around 2% inflation rate per year. So clearly, in this case, we had a hold, and now we'll be focusing on the Fed's best inflation measure, which is the PCE, core consumption and expenditures on Friday, and of course the GDP data that is coming up later this afternoon. So among the key highlights in the markets this morning are one, US economy likely slowed in Q4. So we'll be looking at that to see if it slowed to 2.6, 2.7%, or whether there was a big performance in the economy. So ECB expected to deliver the 5th rate cut. Of course, this is the biggest news in the markets today. German import prices rise the most in 22 months, in this case by 2% year on year in December 2024, following a 0.6% increase in the prior month. So when import prices are increasing, it's usually not very good for the economy. So we'll be looking at that later. So European market poised for higher open. Of course, there is a very strong bet on the ECB rate cut. France Q4 GDP unexpected change to 0.1%. This was not very good for France. And Saudi Arabia's economy expands the most in 2 years. So outside of that, there is one more very interesting development in the market. The London gold market queues up to borrow central bank gold after big shipments to US. So CME gold stocks rose by 12.2 million Oz, or 70% over 2 months. So deliveries to New York tightened London gold market free float. London bullion market seeks to borrow gold from central banks. Ripple effect felt in other gold hubs after CME deliveries. So basically what's happening with a lot of gold traders in the US, they're expecting a lot of tariffs from Trump, either to the Eurozone, to London, and very many other countries. And with this expectation, the gold traders are looking to secure a supply of gold. So as a result, they have been transferring their gold from London to the US. And this has created a scarcity of gold in the UK market, leading to UK traders borrowing gold from the central bank, where delays have basically increased from 2 to 3 days to around 2 to 3 weeks. So this is making it even harder to access bullion gold. And as a result, we should be expecting more pressure on gold prices. So make sure to check that out. So outside of that, I don't think we have any other major news. So we'll be jumping straight into some technical analysis to try and understand where the markets might be headed next. So if you have any questions arising from the presentation, feel free to type them in the live comment section, and I'll be responding to that right away. So I'm checking the comment section right away. Morning, Violet. I can see Francis and Wangari Patrick in the house, Jeff Baraza and Jason. So there's a good question here. Most promising pair to trade today. I'll be responding to that later. After the developments by the Fed journal, the market was relatively muted compared to the fireworks we usually see with such developments, even though it was priced in. What is bound to bring volatility? So volatility will most likely come out of the GDP announcement later this afternoon. And of course, the most volatility will be as a result of the ECB rate decision that has the potential to move the euro strongly. So remember, when you are looking at the dollar index, which is a measure of the strength of the dollar against other currencies, the currency with the highest or the strongest weight is usually the euro. So if there's big movements in the euro, then there will be big movements in the dollar index. So of course, there will be volatility in the dollar pairs after the ECB rate announcement. So what happens when those actual forecasts remain the same values? How does the market react? So in most cases, if the news comes out as expected, then there's not much of a movement. Similar to what we saw yesterday when the Fed decided to hold rates at the current level, which the market had already priced in. It was as expected, so we didn't see much of a volatility. After the Bank of Canada rate cut announcement, Canadian dollar strengthened considerably, indicating that the market had already priced it in. Is there a possibility to see the same with the euro after the cut? Well, there is that possibility. I wouldn't argue with this, especially that last year, for a majority of rate decisions, we had seen this pattern where the market would react to an expected rate decision a week before, and then after the announcement, we would see the market moving in the exact opposite direction. So that was the majority of the reaction in the market as per last week. However, as per last year. However, this year, there is quite a number of challenges. And one, we are seeing more and more divergences between central bank monetary policy. A case in point, yesterday, the US decided to hold rates at between 4.25 and 4.5%. And now we are seeing the ECB going past 3% into 2.9% territory. And in that case, it creates a huge difference between interest rates in the US and interest rates in the Eurozone, which basically creates what we call a carry trade. And this means that investors will be able to borrow short from the Eurozone and invest these in US equities and treasuries. And this creates basically a potential difference that leads to capital outflow from the Eurozone into the US, leading to a further weakening of the euro. So the wider the divergences, the stronger the reaction. We also saw the Bank of Japan hiking rates, creating a very strong JPY against other currencies. So these divergences basically create strong capital flows, and as a result, cause a bigger market reaction. So this year might not be like last year, so it will most likely cause much bigger movements, especially where the divergences are increasing. So does it make sense to save in BTC rather than with the bank? As I always say, BTC has historically had much better returns than banks, so it's a no-brainer. After the extended holiday period in China ends, can we expect the WTI to make a considerable recovery? Please touch on the likely impact of trading WTI in case of the tariffs on fast. So Trump is pro-drilling. He has been saying it again and again, drill, baby, drill. Trump wants to expand America's oil output. He's also pressuring the OPEC countries to expand their oil output in order to lower prices. So in this case, the overall outcome for this quarter is that oil prices keeps going down. So while we may be getting some bumps in between, of course, oil is not going to drop in a straight line, then we expect that this particular path will be sustained and we will continue seeing oil prices getting lower and lower, which is a major strong policy by the current President Trump. So yes, when the Chinese are done with their New Year holidays, which might take about a week or two from now, they'll be back to work. There will be more demand for oil. But then if oil production will have expanded by then we could be seeing even further lower prices. And lastly, there is a question here asking about some analysis on the NASDAQ. So we'll be checking that shortly. So let's get into some technical analysis here. So for those who are new, this is called the MetaTrader 5 trading application. It's the app that you use to access various global markets with FX Pesa, where you're able to trade currencies, foreign stocks, that is stocks from the US and the European Eurozone. Also, you're able to trade stock market indices, commodities such as gold and oil, and it makes it easy to basically manage your trading activity from one platform. For those who prefer trading from an Android or Apple device, you can download the Equity Trader by FXPesa from your App Store or Google Play Store, and you still access the same, but in this case, from a mobile fast platform. So the dollar index was a little changed yesterday, even after having the FOMC press conference. So after the rate decision and FOMC press conference, this was the overall market activity. So nothing much of a change. But overall, for the week, we would say that the dollar has been pretty positive. So this being the fourth day of the week, the dollar has broken towards the upper side or the upper trend line. So given what we are seeing here as the extreme prices, it seems like the dollar is rejecting this upper trend line here and moving further back downwards. But then we'll be seeing more activity today, given the high profile news we're expecting later. So looking at major pairs, for instance, the Euro USD, it has been on a bullish trajectory, but then it entered bearish zone on Tuesday. That is after dropping on Monday, and then on Tuesday it got below the trend line. Then on Wednesday, further downward momentum, and today we haven't had much of a price action. So of course, we'll be expecting more activity, more explosive activity happening in the afternoon when the ECB eventually announces its rate decision. So as for pound USD, we are seeing quite a strong recovery. So from the 4-hour chart, this is how it looks like. Of course, we had a major trend line here, which was a little broken. So once the market broke that trend line, we saw the market pulling back to retest the area, and now we are seeing quite a bounce. So in this case, I would say that the pound is entering some form of consolidation. So if this is anything to go by, then I would suggest that this market is following this particular path here in what looks like a flag, and the market is just testing the upper side. So potentially we could be seeing the market now headed back towards the lower trend line here, which seems like the theme of the chart for pound USD. So for the Australian dollar pairs, we've seen a pretty weak Australian dollar since Monday. Further downside momentum has been experienced, but then today it seems like the Australian dollar is getting some support. But overall, even on the 4-hour chart, it indicates more bearish momentum than bullish, given that the market just printed a new weekly high last week, but this week has been overall bearish. So we could be seeing the dollar strengthening further against the Australian dollar. So perhaps some further downside, given that the market is looking to retest the Asian sessions high. So as for the dollar yen, we had this consolidation that played for a while, but then eventually we had a break this morning, showing some further downside pressure on USD JPY. So there's still more room for downside momentum. So we'll be observing the chart closely to see where opportunities may arise. But for now, this seems more of a bearish momentum market, given that this particular trend line is being supported quite strongly. So if you look at the number of times the market has found resistance on this particular line, then you know that anytime we see the market getting back to the same trend line, the idea will be to be looking for short selling positions. So it has happened so many times. So if the market happens to pump and get back to this area, then we should be looking for short selling positions. So the Japanese stock market index is really showing some resilience and attempting to bounce back towards the upper trend line. So from the 1-hour chart, this is how it looks like. So it's more of a consolidation market. I wouldn't say we have had any very strong trends. So for the last 3 days, this seems to be the overall momentum. And of course, at some point, you'll be expecting a break. So perhaps the break will be happening today or tomorrow. So we continue monitoring this channel of flag-like formation for a potential break. So gold is currently on a very strong push towards a new all-time high. So we talked about this on Tuesday after gold bounced on the lower trend line here. We looked at potential buy positions. In this case, it was a strong bounce. So we saw the market rallying. So yesterday, there was yet another key test of the lower trend line, and this led to yet another bounce, leading to a strong rally. And now we are seeing this rally being extended towards the previous high. So you can see how many times you can have a bullish outlook on an asset and still keep finding opportunities. So notice how on Monday we had an opportunity here, Tuesday again, and then Wednesday towards midnight, and then today is when we eventually have the full impact, which basically implies that there is a likelihood that we complete this journey and get to a new all-time high above 2790. So in this case, I would say the most interesting asset to be trading today would be bullish positions on gold, given the news we have seen with the London gold market, where there has been a lot of scarcity as a result of traders moving their gold to the US. So Brent oil continues to be strongly bearish, as we have discussed earlier in the presentation. So Trump, since he was inaugurated on the 20th of January, all we have been seeing is oil prices moving further downwards. So we had a trend line here that was highly obeyed every time the market got here. So we talked about this on Tuesday. We expected the market to find resistance here. Eventually, there was a test here and immediately prices went down. And then on Wednesday, further downwards momentum. And now today, we are seeing a very important break here, indicating some further bearish momentum in Brent oil prices. So from the daily time frame, this is how it looks like. And it seems like we have erased all the gains that we had seen in early days of January. And we are about to get into an yearly low. So last year's close was around 74.543. So we could be seeing the market heading straight for that particular price action level. So there's still more room for downside momentum. So I'll be looking for short selling positions towards $74.543 per barrel. So the Nasdaq has made quite an important recovery, especially after the big sell-off following DeepSeek or the Chinese AI that is challenging American AI programs. And now we have had quite the recovery. So after the big drop that started from here and it went down about 5%, now we have seen a very strong rally from that bottom, and the Nasdaq is up around 4.54%. Of course, there was a gap right here. Notice the gap, and now the market is looking to close this gap. So in this case, an extension of the rally, especially given the strong tech earnings, would likely lead to the Nasdaq getting to $21,762 per share. So the Dow Jones remains largely positive. We talked about this on Tuesday, that there was a breakout here, which would lead to a further rally upside. So yesterday was largely sideways, some mixed reactions during the FOMC press conference. And now we are seeing the market picking up again, implying that we could be having some positive performance in the Dow Jones later in the day. So this is a strong indication that the rally could extend further upwards. So the Russell 2000 index also making an impressive rally after grabbing some liquidity here. So for those who are familiar with the liquidity grab, we know that there's a lot of traders who may have likely put their stop losses here. So when the market goes to the same level and jumps immediately out of that, it implies that there was a good liquidity grab, which implies that price now heads higher. And of course, the next area where you expect a lot of stop losses to be, or a lot of orders or volume in the market, then in this case, we expect to see the market getting to this area to around 2320. So US 500 also making an impressive recovery. We could be getting a new all-time high. So let's observe this price action area of 6128. Now that the Trump bet is on, so we expect some further upside in the Nasdaq. The news about DeepSeek are now behind us, so we expect to see some further upside as the stock market recovers. So in this case, towards 6128. So Bitcoin had been subdued around 97,758. So it kept moving higher, and this trend line was pretty strong. Notice how Bitcoin could not break above this particular trend line for quite a period. And now we have a breakout towards the upper side, which implies that now we are facing a strong rally. Of course, seeing US equity indices being largely positive, then it implies that Bitcoin could extend the rally to $9,000 per Bitcoin. So we have checked the dollar index, and now we are looking at the dollar against the Swiss franc. Of course, we could be seeing some breakout. So remember, on Tuesday, we expected the market to reject this area and price to drop rapidly. So the drop didn't happen quite as expected. It was only short-lived, and we found support around these support areas here. So from here, we saw the market jumping higher and breaking the upper trend line, which implies the likelihood of the market now moving towards the upper side. So the dollar has been pretty strong against the Swiss franc, pulled back for about 3 weeks, and now we are seeing a potential bounce from here. So potentially the market could rally to the next available resistance level. So I'm estimating around 0.91058. So potentially the dollar could push towards this area here, given the breakout towards the upside. So the New Zealand USD pair was expected to fall further down to 0.562, failed to get to that area, and instantly we had some good support yesterday. So looking at the 15 minutes chart, the market really failed to break anywhere below this level here. And now we are seeing a ranging market. So it's more of a market that is moving sideways. So since Tuesday, I would say this market has not been trending in any direction. So it's more of a sideways momentum market. And now we are seeing a bounce from the lower side, perhaps moving towards the upper side. So for European equity indices, starting with the Spanish IBEX, we have had very strong days. Notice on the daily chart, these are very strong days ahead of the ECB rate decision, meaning that we are seeing a very strong week, and the Spanish stock market index has gone into a new all-time high. So clearly ahead of the ECB rate decision, we should be expecting to see some more upside. So the Euro 50 cash index had an interesting day today, given that we just broke into a new all-time high. So from the 1 hour chart, you can already see the previous all-time high, and now it has happened again. So with a new all-time high, we could be seeing some further upside ahead of the ECB rate decision. The French stock market index, looking at the 15 minutes chart, has been largely on a consolidation zone. So for the entirety of this period, we haven't had much of a trend. So right now, we are just looking at the market that is just bouncing from the lower trend line, moving towards the upper trend line. And of course, the most bullish stock market index in the Eurozone seems to be the German DAX. So the German 40 cash index is really making some news. So notice how on the daily time frame since the year started, a majority of the days have been bullish, with only about 5 days being bearish. So far, it's up over 9% since the year started, and we should be expecting to see some further upside. So from the 15 minutes chart, we had some form of consolidation yesterday, where the market wasn't moving much, and this was especially in the afternoon. So this was the overall performance, and then eventually a break has happened this morning as we get into the London session. Of course, this implies that we continue seeing a further upside, given that there is a breakout, though on a shorter time frame in the 15 minutes chart. So the dollar trading against the Canadian dollar has been struggling. Remember, the oil prices have been pretty weak, and this weakens the Canadian dollar too. So overall, this is what we have been seeing for the better part of the week. So a fake breakout here in the dollar, the Canadian dollar recovered, attempt to move higher, a pullback. So it's more of a market that is moving along this particular channel. So we'll be waiting to see a potential breakout before we determine a market opportunity. So as for silver, there's a strong similarity with what's happening with gold, but silver seems to be more bullish compared to gold. And now from the 1 hour time frame, you can see that we are just breaking a major resistance area. And also, sorry, not silver, but gold euro. Remember, the dollar is currently very strong and stronger than the euro. So gold is making new highs against the euro. And of course, from the 1 hour chart, we are just about to break a multi-week high. So this is currently being tested. If we happen to see a confirmed breakout, then this should be a signal to go for further bullish positions. So clearly, multi-year high, in fact, an all-time high of 26.59. So we should be expecting to see more activity on that. So I'll be checking the silver prices last as we approach the end. So Trump USD meme coin has largely just been moving downwards. So clearly, any attempt to move higher have been met with selling pressure. So we should be looking for potential breakouts with more focus on the bearish side. So if there's a pump, we look for short selling trade, and if there's a breakout lower, then we look to short the meme coin further. So lastly, I'm checking on silver. Yes. So silver has been pretty bullish, clearly after attempting to go lower and breaking the lower trend line here. This happened last week. It failed to materialize to 29.493. So immediately went back into pattern, found the same resistance area, and really struggled to break above this resistance. So eventually the breakout has happened this morning in the last 2 hours. And now we are seeing a potential for silver now heading to the next resistance area around 31.425. So an idea of looking for a bullish position on silver might be playing out later today. So I've already covered the pound USD and euro USD. So is crypto affected by news? Yes, it is, especially in correlation with the Nasdaq and the SP 500. So if you find it difficult to access the MetaTrader 5 trading application on iMac, kindly reach out to our team support and we will guide you. We'll have someone take you through step by step to get it installed on your iMac. So thank you for the question. You can reach us through the live support section on the FX Pesa website. So there's a good question here. For a number of weeks now, the snapshot does not happen on Fridays. Have you discontinued the Friday session? So the main reason this has not been happening is because we have been largely traveling on Fridays. So if you have been following closely, you've seen us do several events. Of course, last week we had an event in Eldoret, and of course we had to travel. So it's much difficult for both myself and Robert to hold the sessions on Fridays when we are traveling to do an event. And of course, next week we'll be doing an event in Kakamega. So if you have any traders in Kakamega, prepare and register from our social media channels. We'll be looking to do a masterclass event talking about strategy, risk management, and of course, some live analysis to identify market opportunities. Also, I'm seeing another comment here. Just saw a video of Robert Kiyosaki saying him and Trump own a lot of gold mines. Does that sound bullish for gold over the next 5 minutes? I would be very skeptical of Kiyosaki and perhaps do some further research. I believe the London news is a much bigger news compared to an update by Kiyosaki. The market doesn't take him seriously. No, FX Pesa allows the 0.01 lot size for a majority of assets, including currencies. But for some assets, you may not be allowed to trade 0.01, especially if it's a very big asset. So that's it for the day. Thank you very much, everyone. Make sure to check out the latest episode of the Bullish Banter podcast. It's available on all podcast platforms, including the FX Pesa YouTube channel. You can click on podcast and check it out. Also, check out the Q1 Market Outlook. It's available on all our social media channels. In addition, check the Financially Incorrect podcast. We have a new episode coming up later today. And on top of that, if you're just beginning your trading journey, make sure to register for a trading account using the links in the description below. And if you are looking to learn about trading, we have various articles available on the FX Pesa website. And of course, a free full online course available on the FX Pesa YouTube channel called Novice to Pro. So that's it for the day. Enjoy the rest of your days. And remember, our favorite asset for the day seems to be gold. Gold is currently pushing strongly higher. So this could as well get into the previous high around 27.86. And of course, get into a new all-time high around 27.90. So that seems more like likely to be playing out today. So make sure to check that out.